Welcome back to the Deep Dive. Today, we're diving into something pretty huge, a massive financial maneuver, really.
Yeah, it feels less like accounting and more like, I don't know, a high-stakes chess game played with crypto.
Exactly. We're trying to track this sudden, very strategic movement of over $500 million in cryptocurrency.
And it's all driven by this one founder, Richard Hart, who's caught in this really bizarre kind of contradictory legal situation.
Right. So our mission today for you listening is pretty focused. We want to track the money. Like, where did it actually go?
Uh-huh. And why use these incredibly intense privacy tools? What does this whole financial repositioning tell us about his strategy? You know, Richard Hart, founder of HEX, PulseChain, PulseX.
Yeah.
How is he playing this game against these global legal threats? It's really about decoding that strategy, asset protection, jurisdictional maneuvering. Where's the money and why'd it move like that?
Okay. And we absolutely had to kick off with the numbers because they're just staggering.
They really are.
Our sources are confirming that since, mid-October 2025, we've seen transfers confirmed of over $600 million worth of Ethereum.
Yeah, $600 million. It's a colossal amount of money being actively shuffled around.
It really is. It's like rearranging a digital treasury, isn't it?
Totally. And the intensity really spiked just recently. Between October 26th and 27th alone, we tracked, get this, 30,066 ETH being moved.
30,000 ETH. Okay, what's that in dollars right now?
At current rates, that's about $125 million. But here's the kicker, the really significant part.
Yeah.
Almost immediately, $124 million of that $125 million was routed straight into a specific, very high-level blockchain privacy tool.
Wow. Okay, let's unpack that because that's not just moving money, that's making it disappear
Right.
from the public trail anyway.
Very much, yeah. Obfuscation.
When you see $125 million, almost all of it vanished through the mixer like that. It screams threat. Like there's some immediate high-priority danger the holder's trying to neutralize.
Absolutely. It's like a masterclass in using these advanced privacy tools, especially when, global law enforcement is watching.
Right. So let's dig into that timeline. How did this $600 million actually move?
Okay, so to really get the implications, you first have to appreciate the scale, like we said, but also the consistency. This wasn't just one big move.
On a panic button.
No, exactly. That total figure, over $600 million since mid-October, it shows a systemic, ongoing effort. It feels very coordinated, like a planned withdrawal from accounts that are, easily watched.
And it's crazy that even after shifting $600 million, sources are saying he still holds over $500 million in ETH in other wallets they know about.
Yeah, which just highlights the sheer scale of his original holdings. It's immense.
So the $600 million move, it's just a fraction, really. But it seems designed to create these untraceable reserves, not necessarily to cash out completely.
That's the key point. It looks like extreme systematic de-risking. Let's actually walk through the timeline for October 2025 because the moves were really structured. They happened in these distinct strategic waves that analysts have mapped out pretty carefully.
Okay, lay it on us. What was the first big signal?
The first major wave that hit on October 19th, that involved 81,000 ETH.
81,000, wow.
Yeah, which was worth a staggering $323 million at that moment. It moved out of the main known wallets.
And where did it go? Just into one place?
No, that's the first step. It was split, dispersed across 22 brand new wallet addresses. Just create it.
Ah, okay. Fragmentation first.
Yeah.
Break up the big traceable block into smaller, fresh targets.
Exactly. That's the immediate goal.
But like you said, fragmentation alone doesn't make it anonymous, right?
Yeah.
Especially not for someone this high profile. The blockchain still links those 22 new addresses back to the original source, doesn't it?
It does, yeah. So that's just step one. The real obfuscation, the move towards anonymity, that started about 5 days later. October 24th.
Okay, what happened then?
That's when we saw the first clear use of the privacy tool you mentioned. 10,900 ETH sent directly into Tornado Cash.
Right. So that's the shift from just spreading it out to actively trying to hide the trail.
Precisely. And the momentum just kept building.
More movements.
Yeah, almost immediately. Between October 25th and 26th, another chunk moved 11,558 ETH. That was worth around $46.91 million.
Okay. Same pattern. New wallets. Tornado Cash.
Sort of. A bit more complex this time. Some of it went to another specific new address first. Let me grab it. 0x7 EC something. Yeah, 0x7 ECF 3037B4B088808219826359D5 T7 May A7 23rd. Like a temporary holding spot.
An intermediary wallet.
Exactly. And then crucially from that batch, 7,300 ETH, about $29.56 million, was immediately pushed through Tornado Cash. But not all at once, in smaller, deliberate batches.
Okay, so now we're seeing layers. Using staging wallets and batching the deposits into the mixer. That adds complexity before it even hits the pool, right?
You got it. It makes tracing much harder. And then the final big push, this is what gets us to that $100 to $25 million headline figure we started with, October 26th and 27th.
What happened there?
A massive 25,000 ETH, roughly $102 million, deposited straight into Tornado Cash, and that was followed almost immediately by that last reported transfer of the 30,066 ETH.
So the pattern holds. Big amounts, new addresses, sometimes intermediary hops, and then straight into the mixer, often in batches. Very consistent.
Undeniable. The operational consistency is striking.
Which brings up that timing question. On-chain analysts noted these big transfers often happen when the ETH market is, well, going up. During upswings.
Yeah, that's been observed. And it's too consistent to just be random chance.
So what's the thinking there? Is it just, market's up, good time to move value, opportunistic?
It raises this interesting question, right? Is it pure profit-taking, maximizing the dollar value of the assets as they're moved? Or is it more strategic repositioning, maybe taking advantage of higher market liquidity to make these huge moves without causing too much slippage?
I lean towards the strategic repositioning, but using the upswing tactically.
Well,
think about it. If you know you're facing potential asset seizures, maybe international legal babbles, you want your untraceable funds, your war chest, to be worth as much as possible in dollar terms, right?
Makes sense.
Moving during an upswing gives you two things. One, better liquidity so the massive volume doesn't tank the price while you move. Two, the ETH you successfully mix is worth more, giving you a bigger defense fund denominated in fiat currency.
That's a really sharp point. It maximizes the protective value of the funds once they're anonymous. If he was moving this volume during a market downturn,
it would look like panic, distress selling, forced liquidation maybe.
Exactly. But moving it during an upswing, that signals calculation, organized asset protection, designed to ensure financial resilience no matter what the legal outcomes are. The market timing itself becomes part of the operational security.
Okay, so the timing is strategic. The method involves layers. Let's talk more about the core tool here, Tornado Cash. Right, this whole elaborate dance hinges on Tornado Cash working as intended. For our audience, many know the basics of DeFi, mixers. But let's go a bit deeper. Why is this specific tool so effective at making, say, $125 million just vanish from a tracking perspective? And how did Hart's extra steps, the layering, make it even harder?
Well, the core idea is pretty clever. It's built specifically to beat the way public blockchains normally work, where every transaction is linked, right? Tornado Cash isn't just a simple mixing pool. It's decentralized and uses some pretty advanced cryptography.
So the basic blockchain idea is follow the coin. Every coin has a history, a path. How does Tornado Cash break that path permanently?
It uses something called zero-knowledge proofs, or ZKPs. It's fascinating stuff. Users deposit crypto, but only in fixed amounts, like 1 ETH or 10 ETH or 100 ETH, into this big shared smart contract pool.
Standardized amounts, okay? Why is that important?
It helps create the anonymity. When a user wants to withdraw, they take out the same fixed amount, say 10 ETH, to a brand new, clean address. The ZKT is the magic part. It lets the user mathematically prove to the contract, yes, I previously deposited 10 ETH, without revealing which specific 10 ETH deposit was theirs.
Verification without revelation. It proves you have the right to withdraw, but doesn't link your withdrawal back to your specific deposit.
Exactly. It proves ownership rights cryptographically, but severs the transaction history link. Once the funds are pooled and withdrawn successfully to a new address, that link between the deposit address and the withdrawal address is, for all practical purposes, gone.
So for anyone watching from the outside, like chain analysts or law enforcement,
trying to map the funds from the known source wallet through the mixer to the final destination wallet becomes what they call computationally infeasible, basically impossible with current tech.
Okay, but you hear about crypto forensics teams, right? They're smart, they have tools, things like taint analysis, cluster mapping. They try to piece things together statistically. How did Hart-specific actions make their job even harder? He didn't just dump it all in, did he?
No, and that's where the extra layers of precaution really shine. A forensic analyst is looking for patterns, for statistical clues, for slip-ups.
Okay, let's take the batch transfers you mentioned. He moved, 7,300 ETH in multiple smaller batches into Tornado Cash. Why do that instead of one big $29 million deposit?
It messes with the statistics. Think about it. If you deposit a huge, unique amount, say $125 million all at once, Analysts can just watch the withdrawal side for an equally huge, unique withdrawal around the same time.
Right, it stands out like a sore thumb in a pool that's mostly smaller random amount from other users.
Precisely. It creates a traceable statistical outlier. By using smaller, more common batch sizes, like maybe 100 ETH at a time, repeatedly his deposits blend in with the crowd, with the noise from thousands of other users. It becomes impossible to confidently link his sequence of deposits to his subsequent sequence of withdrawals just based on size and timing. He's using the pool's normal activity as camouflage.
Smart. Okay, what about the intermediary wallets? You mentioned funds hitting new temporary addresses before going into Tornado Cash and presumably using fresh wallets for withdrawal after.
Yeah, those are crucial too. They're designed to defeat techniques like cluster mapping and taint analysis.
How does cluster mapping work?
It basically assumes that if funds move rapidly between several newly created wallets, they probably belong to the same person or entity. It tries to cluster activity.
Right.
By using these single-use intermediary wallets, moving funds from the known source to wallet A, then wallet A to wallet B, then wallet B into Tornado Cash, he forces analysts to consider a much wider, more complex potential path. Each hop adds noise and uncertainty. The funds get rinsed a bit even before the main wash cycle in Tornado Cash.
And using a fresh wallet for withdrawal.
Essential. If he withdrew the clean ETH directly to an address he's known to use or one that's been linked in before, well, the whole effort is pointless. You've just de-anonymized yourself immediately. So fresh address for deposit, fresh address for withdrawal, standard OPSEC for this stuff.
So it really sounds like he wasn't just relying on Tornado Cash itself. He, or someone advising him, understood the forensic weak points and actively countered them.
Absolutely. This level of planning, the batching, the intermediary hops, it suggests professional advice, or at least a very deep understanding of blockchain privacy and forensics. It's maximum effort towards anonymity.
So the challenge for anyone trying to trace this now is immense.
Extremely. They need to pinpoint withdrawal timing and amounts, link them statistically back to deposits, all while sifting through potentially millions or billions of dollars worth of other activity in the mixer. The resources needed to have even a chance of cracking this specific sequence are enormous. Which, is the whole point.
Yeah, it's the financial equivalent of dissolving into a massive busy crowd. You know the person went in, but finding them again, good luck. The assets are effectively untraceable by design.
That's a good analogy. And the reason for all this financial maneuvering, this digital disappearing act, it really comes down to the incredibly strange legal tightrope Richard Heart is walking right now.
Yeah, it's totally contradictory, isn't it? On one side, he scores this huge, almost unbelievable win against a major regulator.
A really remarkable win, yeah. Against the SEC, the biggest player in the crypto regulatory world in the U.S.
That's the dismissal back in February 2025, right? U.S. District Judge Carol Bagley Amon just tossed out all the SEC charges against him.
She did. And in a space that's usually drowning in regulatory uncertainty, getting a clean dismissal like that, that's a massive deal. It provides significant legal clarity, at least within the U.S.
And the reason for dismissal was key, wasn't it? Jurisdiction.
Exactly. The judge basically ruled the SEC hadn't proven its case that Hart's operations had enough connection to the United States. They couldn't show the tokens were sold on U.S. exchanges or that he specifically targeted U.S. investors in his marketing. So no jurisdiction.
Okay, but let me push back on that a little. Is it really a victory or more like the fight just moved elsewhere? If the case was dismissed because the SEC didn't have jurisdiction, doesn't that just mean the core issue, whether these things are securities, could still be challenged by regulators in whatever country he was operating from, or where the tokens were actually marketed or sold?
That's a very fair point. It's a critical piece of skepticism. It's a victory only in the sense that the biggest, most powerful regulator, the SEC, is now off the table for this specific case. And the SEC chose not to try again. They didn't amend or refile before the April 21st deadline. So the U.S. case is effectively closed. That gave him huge breathing room regarding U.S. securities law, made his projects feel safer, at least from a U.S. perspective.
Okay, so a win in the U.S. context.
Yeah.
But like you said, it's completely overshadowed by this other, much more immediate and arguably much more dangerous threat.
Yeah, the international fugitive status. That's the other side of the coin.
So despite winning against the SEC, Finnish authorities managed to get an Interpol red notice issued for him back in December 2024.
Correct. And that completely changes the game. The threat shifts from potential fines or regulatory action to actual physical arrest, extradition, jail time.
And for listeners, maybe let's quickly clarify what a red notice actually is. It gets thrown around a lot.
Good idea. It's not quite an international arrest warrant, though it's often treated that way. Officially, it's a global alert, a request sent out by Interpol to law enforcement in nearly 195 member countries.
Asking them to do what?
To locate and provisionally arrest a specific person. The arrest is usually pending extradition back to the country that requested the notice, in this case, Finland or some other legal action.
So it makes international travel incredibly risky. You could get flagged and detained almost anywhere.
Extremely risky, yeah. It puts you on watch lists globally.
And the charges coming out of Finland, they're serious. And it's a mix, right? Not just financial stuff.
It's a very serious mix. First, there's the financial side. Aggravated tax fraud. They're alleging he avoided paying hundreds of millions in taxes between June 2020 and April 2024. Huge numbers.
Hundreds of millions, okay? And the other charge?
The other charge is assault, specifically allegations that he assaulted a 16-year-old minor. The details mentioned were dragging them by their hair and punching them multiple times.
Wow, okay? Having a violent crime charge like assault mixed in with the tax fraud, that really complicates things, doesn't it?
Drastically. Tax fraud, even aggravated tax fraud involving huge sums sometimes. Well, certain jurisdictions might be more protective of wealthy residents or offer more avenues for defense. But assault, especially involving a minor, that often carries much more weight internationally. Countries are generally more willing to cooperate and extradite for violent crimes.
It raises the stakes significantly beyond just financial penalties.
Absolutely. And it leads us straight back to why he's moving the money like this. It's jurisdictional arbitrage, essentially.
Explain that.
He won his case in the U.S., securing regulatory safety there, but now he's facing serious criminal charges from Finland. So he's trying to use his location and the location, or lack thereof, of his assets to play these jurisdictions against each other.
And the threat isn't theoretical. The Finns have already acted.
They have. Finnish police seized about $2.6 million worth of luxury watches, apparently 20 Rolexes from a place he used to live in.
So they're actively seizing assets they can find.
Yes, which confirms the immediate tangible risk. That's why you deploy something like Tornado Cash to make your most liquid assets, your crypto, impossible for them to find and seize like they did the watches.
Okay, so putting it all together.
Yeah.
The U.S. win gave him a green light on the regulatory front there, confirming his project structure was okay from an SEC perspective. But simultaneously, the Interpol red notice and the actual seizure of his watches show Finland is coming after him hard, both criminally and financially.
That's the core conflict. Legal freedom in one major jurisdiction, physical constraint and asset seizure risk globally, driven by another. This extreme contrast is almost certainly the main driver behind this massive $600 million financial reorganization using privacy tech. He's trying to insulate his wealth from the Finnish threat.
Right, so this $600 million shuffle, using Tornado Cash for a big chunk of it, is clearly a proactive defense. Given this crazy legal landscape he's in, we can start to analyze, what are the likely reasons? What's the strategy behind creating this huge pool of untraceable money? What's he likely to do next with it or because of it? Okay, scenario one seems the most obvious, right? Just pure asset protection and liquidity management. The main goal is stopping Finland, or any cooperating country, from freezing or seizing his wealth.
That has to be the primary driver, yes.
Yeah.
Moving $125 million, maybe more, through Tornado Cash. That's building a financial fortress. If Finnish authorities or courts manage to get freezing orders recognized internationally...
Which they can try to do through treaties.
Exactly. Any money in a known bank account, any property titled in his name, any crypto sitting on a centralized exchange that complies with court orders, all that could potentially be frozen or confiscated.
But the ETH that went through Tornado Cash
is effectively off the radar. It exists on the blockchain, but it's not tied to his identity in a way that authorities can easily prove or act upon. It ensures he keeps control, keeps liquidity, no matter what happens with freezing orders elsewhere. He's making his core fund seizure resistant. His war chest is protected.
Which leads right into the second likely scenario, funding the defense, preparing for potentially massive legal costs and maybe even settlements down the line.
Definitely. Fighting international charges like aggravated tax fraud involving hundreds of millions, plus a serious assault charge, potentially across multiple countries if extradition battles happen, that requires an absolutely enormous amount of money for legal fees.
We're talking top-tier international lawyers, extradition specialists, local counsel in Finland, maybe elsewhere.
Tens of millions of dollars a year, easily. And he needs to be able to access and pay those lawyers without raising red flags or having the funds intercepted.
So the mixed funds help there, too.
Critically, by using ETH withdrawn from Tornado Cash, the source of the funds used to pay his legal teams is obscured. Authorities trying to assess his ability to pay fines or trying to seize funds earmarked for legal defense, they can't easily trace or target this money. It's about maintaining the financial firepower needed for a long, expensive fight. Financial self-defense.
Okay, asset protection, legal fees. What about his physical location? Scenario 3. Geographic relocation strategy. His current location isn't public knowledge, right? He was thought to be in Finland, but presumably not anymore.
His exact whereabouts are unknown, yeah. And if the ultimate goal is to fully neutralize the threat posed by the Interpol Red Notice, simply hiding isn't enough. He needs to find a place to land.
A safe haven, basically.
Essentially, yes. A jurisdiction that is unlikely to cooperate with Finland's extradition request.
What kind of place would that be?
You'd be looking for countries with historically weak extradition ties to Finland or the EU, especially for the specific combination of charges, tax fraud, plus assault. Or countries known for being generally resistant to international legal cooperation requests, particularly from Western nations.
Like where, for example? Any regions come to mind?
Often places in the Middle East, some parts of Asia, certain South American nations, or some island nations that have built economies around financial privacy or offering citizenship presidency with fewer strings attached. Think maybe the UAE, potentially some Caribbean states, depending on their specific treaties.
And having a large stash of untraceable crypto would be pretty helpful for setting up shop in a place like that quickly, wouldn't it?
Extremely helpful. It provides the ready capital needed to potentially secure residency or citizenship through investment programs, buy property, set up local accounts or businesses, and just generally establish himself financially in a new country, all without necessarily going through traditional banking channels that might flag the Interpol notice.
How would he actually use the anonymous ETH in that new location, though? He still needs to convert it to local currency or assets somehow, right? Wouldn't that risk exposing him again?
That's the operational challenge, for sure. The strategy would rely on using less formal, more decentralized methods in the new location. Things like local over-the-counter OTC crypto brokers who might have less stringent KYC/ML checks, peer-to-peer exchanges, maybe even direct deals. The fact that the ETH itself has no traceable history back to the Red Notice makes these kinds of high-value transactions feasible with lower risk compared to wiring funds from a known, potentially flagged bank account.
Okay, so it facilitates finding and funding a move to a non-extradition country. Makes sense. What about the projects themselves? Scenario 4. Operational restructuring and project development. The SEC win did lift a huge cloud over HEX, PulseChain, PulseX in the U.S.
That's a definite possibility, too. The SEC breathing down his neck meant any funds clearly identifiable as project treasuries, especially if linked directly to him as the founder, were potentially at risk or at least under scrutiny.
Right.
With the SEC case closed in the U.S., he might be using this opportunity and the privacy tools to move funds around, maybe shifting assets from wallets known to be his initial founder or seed investment wallets into new, cleaner wallets designated purely as project treasuries.
So separating his personal legal risks from the project's operational funds.
Plausibly, yeah. It could be about ensuring the projects can continue development, pay developers or grants, etc., using funds that aren't directly tainted by his personal legal battles, especially the international ones, restructuring for resilience.
Okay. And the last scenario, number 5, is about his recent behavior change. Increased social media activity. He kind of reappeared online, didn't he?
He did, yeah. After almost 2 years of being relatively quiet, especially directly engaging with people, he suddenly became much more active on social media around the time of these huge transfers and the updates to his legal situation, directly responding to community members, critics, everyone.
What do we read into that?
It suggests a shift in confidence, maybe. Perhaps feeling more legally secure after the SEC win, or more financially secure now that a significant chunk of assets is protected via Tornado Cash, or maybe just feeling prepared for the next phase.
So re-engaging publicly could be a calculated move.
Could be. It communicates to his supporters, look, I beat the SEC, I've handled my finances, I'm still in control, I'm still here building. The very act of successfully moving and securing $600 million without being stopped is in itself a powerful message of continued capability, despite the Interpol notice. It rallies the base.
Interesting. So multiple plausible drivers, all stemming from that core legal conflict.
Hmm.
So while Richard Hart is navigating this complex international legal minefield and shuffling hundreds of millions, what does it all mean for the actual crypto projects he founded? HEX, PulseChain, PulseX. They must be feeling the turbulence.
Oh, absolutely. The price action has been wild, very reactive to the legal news. That SEC dismissal, for instance, caused a huge, albeit temporary, surge of excitement and buying pressure.
Right, you mentioned the numbers earlier. What were they again?
Yeah, HEX jumped something like 78.8% in the 2 weeks around the February-April 2025 news. It even popped nearly 10% in just 24 hours when the final SEC deadline passed without them refiling.
Wow. And the others?
PulseChain, PLS, was up around 36%, and PulseX, PLSX saw about a 67% rise during that relief rally period.
Okay, so that clearly shows how much the SEC investigation was suppressing the price. Investors breathed a massive sigh of relief when that specific threat vanished.
For sure. But as you said, it was temporary relief. The fundamental uncertainty hasn't gone away, it's just shifted.
Where does that uncertainty lie now, if the SEC isn't the problem anymore?
Well, despite those surges, you have to remember these projects are still way, way down from their all-time highs, like declines of 87% to 99% from their peaks previously.
Ouch.
Yeah. And while some analysts still try to forecast potential growth, I saw one suggesting HEX might hit 0.01050 by sometime in 2025, which would be like a 60% increase from current levels. Every single forecast basically has a huge asterisk next to it saying extreme uncertainty.
And that extreme uncertainty, that's now tied directly to the Interpol red notice and the Finnish charges, isn't it?
Absolutely. That's the structural risk now. Hart might have cleared the U.S. regulatory hurdle, which is significant, but having the founder pursued internationally on serious criminal charges, including violence, and facing potentially massive asset forfeiture, that casts a huge shadow over everything.
How does it practically impact the projects?
It creates this almost impossible situation, especially for projects that rely heavily on community confidence and, let's be honest, are quite centralized around the founder's vision and personality.
Even if they're technically decentralized on a blockchain.
Right. The community, the investors, the developers, a lot of the energy and direction comes from Hart himself. If the founder is potentially facing arrest, extradition, or is forced to operate entirely from the shadows, constantly focused on evasion and asset protection, that's a massive liability.
It threatens continuity, doesn't it? Like,
Yeah.
who's steering the ship? Can roadmap promises be kept? Can crucial decisions be made if the leader is potentially incapacitated or unreachable?
Exactly. That's the core problem. People invested in his vision, his leadership style. If that leader is now a fugitive, it raises serious questions about the long-term stability and integrity of the whole ecosystem.
And also maybe the risk around the tokenomics. If he personally controls a huge amount of the supply.
That's another layer of risk, yeah. If a large portion of the tokens are held by someone whose financial future is precarious and tied to staying anonymous, what happens to those tokens? Could they be dumped suddenly if he needs liquidity? Or locked up indefinitely? Any major move he makes with his holdings, even if intended for project development, gets viewed through the lens of fugitive managing assets under duress.
So the market is stuck, weighing this weird combination. Good news on the U.S. regulatory front, but terrible news on the international criminal front, plus the ethical cloud from the assault charge.
Precisely. And that inherent conflict, that extreme uncertainty, is why the prices haven't sustained a real recovery. The Interpol threat and everything that comes with it is just too big and too disruptive for investors to ignore, even with the SEC victory in the bag.
Okay, so wrapping this up, this deep dive really shows that the $600 million crypto shuffle wasn't just moving money around. It's one of the most strategically complex financial defense plays we've seen in crypto lately. A direct response to serious, coordinated legal pressure.
Yeah, the key takeaways are pretty clear, I think. First, the deliberate use of Tornado Cash for at least $125 million, likely more over time, is textbook asset protection at the highest level. It's about creating that untouchable liquid reserve fund, making assets seizure-proof.
Second, it's a masterclass, maybe a risky one, in jurisdictional arbitrage. He's leveraging his legal freedom from the SEC in the U.S. while actively using advanced tech to shield assets from Finnish authorities pursuing criminal charges and forfeiture globally.
Right. The money movements are all proactive steps. positioning assets for a potential long legal battle, possibly funding a relocation to a safer country, maybe restructuring project funds, or maybe all of the above. It's a high-stakes financial survival strategy playing out on the blockchain because the real-world threats are so severe.
Which brings us to our final thought, something for you, the listener, to chew on. Richard Hart pulled off a significant win against the SEC, achieving regulatory clarity in the biggest market, something many projects dream of. Huge victory.
But at the same time, he's using highly sophisticated privacy technology, mixers like Tornado Cash, to hide potentially hundreds of millions from international authorities who are pursuing him not just for massive alleged tax fraud, but also for alleged personal violence.
So the provocative question is this. How does the crypto community, or even just an observer, weigh these two things? How do you balance the value of achieving that crucial jurisdictional clarity? The win against the SEC, against the serious ethical and operational questions raised by a founder becoming an international fugitive, pursued for charges that include both financial crime and violence.
Yeah, that combination, the legal freedom he secured on one front versus the physical and financial constraints imposed by the other, makes tracking this money and predicting his next move way more than just looking at blockchain transactions. It's about strategy, survival, and some really tough ethical questions for the space.